Hi traders, welcome to this pre-weekly market review by Trade Genius Group. We're looking at the market now post FOMC meeting from last week and post the UK votes in Scotland. Just to give you a quick recap, good news for the UK. Scotland voted no for now to independence and will stay part of the United Kingdom and Great Britain, and obviously this is essentially good for the pound, keeps it strong, keeps it unified. And in addition to that, last week we did see also the FOMC coming out with some rather insightful statements, basically hinting that the economy is looking like it's going to continue to pick up towards 2016, but it may not mean that interest rates will be increased at the same time, and that's looking more likely to take place not until 2017 potentially. So that could install some, or how shall I say, cause a lack of confidence in the dollar. Contrastingly, we've seen a very strong USD in the last few weeks and months. Let's move over to the technicals, guys. We're starting with the pound dollar, obviously, because of the vote last week in Scotland. It's interesting, on the long term you can see this rising wedge technical pattern, and you can Google away and search that, but basically it means that there's a lot of potential for this pound to continue to touch the supports just around about 159 before it decides whether or not it's going to crash further or rise. Most long-term economists at the moment are pretty bullish on the pound. The UK economy is doing quite nicely. Technically, as you can see from these circles, this is a huge support level, and it used to be, interestingly, also a resistance point. Let's zoom in on this level now, just around about 163 there. You can see this kind of candlestick that I've shown you there. It's an elongated spike, doji candle. It's basically a signal that there is no confirmation. It's a tough battle between buyers and sellers. It's been a previous resistance, you can see. It's been a support, and there's also, interestingly, a gap at this price. So it keeps playing around the gap, and you can see this gap now. I'm just going to highlight it, as well as the previous support. And what it means is that you can actually use this as a chance to prepare a trade. Basically, we have a spike to the downside just above 161. There we go. And we also have a spike to the upside just above 165. So it's kind of like a 400 pip range there that you've got. And that's interesting. If you see any moves either side, you should obviously take that trade direction for the medium and long term. Moving on now, we're looking at the New Zealand dollar this week, just because of the technicals that we've seen on this pair. It's had a huge sell-off, but it looks like it needs some sort of a short-term pullback before it continues this downtrend. You can see here a weekly megaphone pattern, and I've shown you the supports and resistances. And now we are approaching the lower support of this megaphone, which comes in below 0.80, and you can see that just above there at 81 we have a sort of midterm support, which I've just been highlighting. So if we zoom in on this chart, you can see there the market on a daily level, the last three candles is showing you a double bottom, the spikes there forming and finalizing right around the same prices. So again, it looks like there's going to be a bit of buying there for the short term, but in the long term, a lot to say for the sell-off on the New Zealand dollar, and that may well continue throughout 2014. We're going to leave you with the US stock market. It's the S&P 500 here. We've been watching this for a long time, obviously just non-stop rallying on that over the last couple of years, especially the last year and a half. And we can see here a potential for a small pullback now, just around the 2000 mark and possibly back down towards the 1980 marks. So you can see there touching the resistances many times. We can see it recently on the daily chart here, a spike that just broke out above the resistance line, this upper blue line that I've just circled now. And that spike is also firmly anchored outside the SD plus 2 Bollinger Band. So this can often insinuate potential for a reversal, and if we zoom in on a 4-hour chart, you can see that here. It's kind of like a market noise false breakout, and obviously these are often met with a lot of retracements. Again, you have a candle there, which is a reversal potential candle there with a long wick, obviously, and a small body. And I would encourage you to keep an eye on this trade. It has very tight stops, lots of potential for pullbacks to the downside, and any indication of a trend resumed pattern to the upside would just obviously give you the entry signal with tight stops just above this resistance, just below, sorry, this resistance line. Okay, guys, we hope that gives you enough of a picture for this week's market to come. Those are the major pairs we're focusing on. Announcements also to come this week include New Zealand dollar's trade balance, which coincides nicely with that NZD trade, and Wednesday's US data, Thursday's US data, and also on Thursday, of course, the Australian Governor Stevens will be speaking, so you can track that Aussie dollar too in light of what we said regarding the USD. Have a great week and trade safe.